Fixed asset management. That is where we are supposed to start from. Fixed assets management. Fixed assets management. So first of all, we had said that if you want to record fixed assets, number one, you go to lists. You go to lists, then chart of accounts. Lists, and then chart of accounts. Lists, then chart of accounts. Remember, the chart of accounts is for all aspects of income, revenue, asset, liability, and equity aspects that you want to record, including cost of sales. But right now, we are only interested in what? We are only interested in fixed assets. Now, before we record any fixed asset, ladies and gentlemen, I want you to notice something. Notice something. QuickBooks already has some aspects of fixed assets recorded here. Like for instance, number one is computer equipment. But I want you to notice how this is recorded. Notice that we have computer equipment here. Then below computer equipment, with a little indentation, we have cost and depreciation. Now, anytime you see an account here, then after this, there is more of that indentation. After that, there is more of that indentation to the main account. It means that whatever is below that particular account, whatever has been indented, is actually what we call a sub account. It's a sub account of that particular what? Of that particular major account. It's a sub account of that particular major account. Just a minute, I share my screen. So that now means that if you see that in that order, like for instance, you are seeing what here? You are seeing computer equipment. Then below computer equipment, there's cost and there's depreciation. It basically means that cost is a sub account of computer equipment. Depreciation is as well a sub account of computer equipment. And you'll realize that probably all fixed assets have got those sub accounts. Furniture and fixtures, cost, depreciation. HP computer, it doesn't have that. We have got land here, no depreciation. Of course, land doesn't depreciate. Leasehold improvements, motor vehicles, cost depreciation, office equipment, cost depreciation, vehicles, security deposits, and all that. So those are actually the fixed assets that are available here. So by default, QuickBooks has already made this list of fixed assets. But let's say that there's a fixed asset which you want to record, which is not available in this particular list. There's a fixed asset which you want to record that's not available where? In this particular list. Now, you can use this list if these are your fixed assets that you have. For the purposes of this class, for you to understand this, I'm going to make an assumption of a scenario where probably you are the one who is starting to record this for the very first time. So we are going to create a record so that you get to do what? You get to understand how to go about it. So I want us to create one fixed asset list, step by step, from the very first stage. Now, what is this? Let's say, for instance, we want to create a fixed asset register for building. Okay? We want to create a fixed asset register for what? For building. We want to create a fixed asset register for building. So we're going to create our fixed asset account for building till we go to where we trace or we track its depreciation. Good. Now, how do you create a new fixed asset account? We said you either go to account and say new, or alternatively, just right click and then new. Right click and then new. Next, we choose. Stanislas, your QuickBooks isn't opening. Where's the problem, Stanislas? Are you getting any response as to why it's not opening? Okay. It requires a password. Yeah, after some time, by the way, QuickBooks will automatically ask you for a password. In fact, I even keyed a password for mine in the morning. Yeah. Normally, if you don't create a password within some days, QuickBooks will force you to create a password before you log in. That is normal. So if you're asked for a password, kindly just create a password. Yeah, sure. That's true. That's true. So if it prompted you for a password, please just create a strong password and then you confirm the password by repeating it. Just create a password that you will remember, kwa sababu sasa anytime you'll want to log into that account, you will always key in that password. So create a strong password that you can remember. Make sure that it has maybe a special character like @ or hash. It has an uppercase and a lowercase letter, and as well include a number. And let it be at least 7 characters long. So the issue of passwords is something that we were to cover later, but QuickBooks actually forces you to do that first. And then after you have entered a password and confirmed, set a security question. The security question helps you to reset your password, but anyway, don't worry. You can maybe select maybe something like your school where you want to, the name of the high school where you went to, and then the security question answer will be the name of the school where you went to, something like that. I believe you can be able to effectively do it. So kindly do that, and then let me know when you are ready, Stanislas and Maureen, and maybe any other person, Patrick, whose software requires a password. Kwa wale ambayo hawajaitishwa password, don't worry. If you will be asked for a password, you'll key it in. Otherwise, we will learn how to create passwords. Maureen is done. Thank you. Stanislas, Patrick. Patrick is okay. Thank you. Stanislas. Good. Is there another person who is still creating a password, please? Because I don't want us to restart this process. Is there any other person who is still creating a password? Is there any other person still creating a password? Okay. So we proceed. Whatever was not in previous lesson, is there where I can proceed with this? Yeah. You can proceed with this because what we want to do right now, probably an aspect of it will not be related to whatever you did in the previous class. And maybe a part of it will be related, but I will show you how to navigate through. Mine is prompting, no company open. What is that, Gladys? No company open. You should check on top here. If you check from top here, that will give you the name of your company. Like this is BGF. But just in case maybe you have got no company file open, you can just go to file. You can go to file and then you say open. Open or do what? No. You go to file and then you say open previous company. File and then open previous company. You'll find a list of all your companies here. Then you select which one that you want to open. File, open previous companies. You'll find a list of all your companies here. Select which one that you want to open. I believe we are good to go. I believe we are good to proceed. I believe we are good to proceed and that the issue of the password has been sorted. I know that could be the only technical issue, the password issue, and it's sorted. So we were talking of recording fixed assets. We were talking of recording fixed assets, and I'm just starting afresh. So you just go to lists. You just go to lists and then chart of accounts. So all fixed assets, you should record them from the chart of accounts. Lists, fixed assets, right click, then you say new. Right click, and then you say new. Lists, chart of accounts, right click, new. Then from here, we choose fixed asset because that is what we want to record. Fixed assets, then continue. So assume that our very first fixed asset that you want to create is building. Now, let's create an account name. And this account will be called what? Building. This account will be called building. Now, sub-account of, we are not going to use the sub-account of at this particular stage. I will show you in the next few minutes how we will use the sub-account of. Then we have the description. So do you have any description that you want to give this particular fixed asset here? If yes, please give the description. If none, just proceed. So maybe I can say that this is what company is what building. Something of a sort. And then there is enter opening balance here. Once again, for this particular account building, we are not going to enter any opening balance. We are going to leave it as it is. What we are basically creating here, ladies and gentlemen, is a major account of building, okay? We are creating what? A major account of building. So for now, just key in the fixed asset account name, and if you have the description, key in, otherwise you can leave it blank, just that. Then once you're done, you say save and close. Once you're done, you say save and close. Now notice that we have a new account here called what? Building. A balance total of 0. Now, after that, we'd want to track depreciation and the net book value of this particular what? Building. That means, ladies and gentlemen, that we must have an accumulated depreciation of this particular building, and as well, we must have an account to track the cost of this particular building. Notice here, for instance, if I pick on motor vehicle, there's motor vehicles at cost and depreciation. What QuickBooks has done is just that it has just created these accounts. What does it mean? If you see a value of 00, it means that, for instance, you haven't purchased these particular fixed assets, but the accounts are already there. You've already created an account. Maybe you are planning to purchase them. So what will happen once you purchase? You'll come and record that. Now, let's proceed with our building. So we're going to create an account to track the cost of the building. Now, let's say we have now purchased the building, or maybe we have now done doing our building. So what do? We now record the cost of that particular building. Once again, right click, then say new. Right click, say new, and then you say fixed asset again. You select on fixed asset again, then you say continue. So this time around, what are we doing? We are creating building cost. Building what? Cost. Building cost. But this time round, make sure that you mark it as a sub-account. Make sure that you mark it as a what? As a sub-account. Make sure you mark it as a sub-account. And it is a sub-account of what? Ladies and gentlemen, this is basically a sub-account of building. It goes hand in hand with building. So mark it as a sub-account of building. This will only be active once you tick this box for sub-account of. So first of all, tick this box for sub-account of. You come to this drop down, you'll find the name you'll find the name building. So the building cost will be sub-account of what? Of building. The building cost will be a sub-account of what? It will be a sub-account of building. Here you have the description, give it if you have, and any notes if you want to attach that. And in this time around, ladies and gentlemen, we are going to record the cost of this particular building. What is the cost of this particular what? Building? Whether we are purchasing a second hand, we are acquiring from somewhere, that is what we will record from our sides as what? As the cost. So enter opening balance. Enter opening balance. Assume that the cost of this building, for instance, is 2 million. The cost of the building is 2 million as of what date? Probably as of 31st of July 2024. Let's assume that the cost of the building is 2 million as of 31st of July 2024. 2 million as of 31st of July 2024. I'm just going to click OK. So I have building at cost, a sub-account of building with an opening balance of 2 million. So this one I've said is basically the cost at which we have acquired the building. This is the cost at which we have acquired what? The building. So this is the initial cost of the building. You say save and close. Say save and close. Then after you save and close, I want you to notice something. Come back to your chart of accounts. You'll realize that your very first account of building has been given a value of 2 million. Building cost has as well been given 2 million. Now, ladies and gentlemen, it is this main account that will be giving you the net book value of that particular asset. And therefore, it would be maybe probably just the same thing if you record this, maybe probably like building net book value or maybe net book value building, because this is from the place from which you'll be tracking the depreciation. So it is this that will be giving you the net book value. In case this particular asset has depreciated, once the depreciation is reduced on the building, the net book value will as well reflect here. Now, we have got the building with this value, and we have got the building cost with this particular value. Let's make an assumption that 1 year is gone, all right? Let's make an assumption 1 year is gone, and therefore we want to record depreciation. With respect to that, we could call it depreciation this year. But listen, would we keep recording depreciation for this particular asset? No. So I want us to create one account called accumulated depreciation on building. So I want us to create what? One account for accumulated depreciation on building. Notice we already have building at cost. So next what we do? We create the account for accumulated depreciation. If you are going to record depreciation for 1 year, then you're just going to create it as what? Depreciation. But I'd prefer that you create accumulated depreciation because you'll be recording depreciation on an annual basis. For the first year, it may not make sense when you call it accumulated what? Accumulated depreciation. But you'll understand that once you get to the second year. I believe somebody is understanding what I'm trying to say in theory, because I believe these are things that you have done. So you're going to right click and then you say new. So again, for the building, we are creating another account for that particular building, but this time round to track its depreciation. So you'll say fixed asset once again, continue, fixed asset, and then you continue. So what will be the account name? The account name will be what? Accumulated. The account name will be what? Accumulated depreciation. So let me call it building accumulated depreciation. Building. The name is too long. You can reduce the accumulated depreciation to be ACC. Building what? Accumulated depreciation, yeah. Building accumulated depreciation. And again, this should be a sub-account of who? Building. This should be what? A sub-account of building. This should be a sub-account of building. This should be a sub-account of what? Of building. This should be a sub-account of who? Building. This should be a sub-account of building. Okay. So let's enter an opening balance, probably to record depreciation maybe for this particular year. So we enter an opening balance to record depreciation for the first year. And let's say maybe for the first year, we have a depreciation of 50,000. So as of maybe, maybe let me say 15th of August, 2024, because my asset was actually from 31st of July. So I can say from 15th of August, 2024, we have a depreciation of 50,000. Okay. Sorry. There's something that you need to do for the opening balance. Your sub account does not have building. It must have. If you have created the account for building, it must have. Have you created building account? Have you created the account for building? It must have if you have done so. It must have. Sub account of, it must have the building. If you have created an account for building, then it must have, unless you did not create that account for building. So I was talking on the opening balance. I believe nobody has recorded this. So for the opening balance, notice that this is what? Depreciation, okay? This is depreciation. This is depreciation. This is depreciation. This is depreciation. So for depreciation, the opening balance, please record it as negative. Why? Because it is going to reduce the value of that particular asset. So make this negative. Record the depreciation as negative. So the opening balance should be minus 50,000. The opening balance should be minus what? 50,000. Record the opening balance as minus 50,000. Record the opening balance as minus 50,000. Click OK. And now you can save and close. You click OK. And then you can now save and close. Click OK. Then save and close. Now, I want you to go back to your chart of accounts and check on this. Notice that we have building. Now its net book value is clearly 1,950,000. The cost is still 2 million. All right. Building cost is 2 million. Building accumulated depreciation is 50,000. And then, of course, now the building net book value is 1.95. Now, for the sake of this student, this is Naomi and probably any other person that was lost. We said the very first stage or the very first thing that you do is to first of all create an asset account. Once you create an asset account, proceed to create its cost account by setting it as a sub account of that main asset account. I think the best thing that we can do is to probably just finish on this and then we create another one. Let's finish on this and then we create another one instead of starting to repeat this again. And yet we already have it. So let me finish this. Then we create another one. Now, we have now recorded the cost of the asset. We have recorded depreciation for this year. Now, please, I want you to take note that QuickBooks will not automatically compute your depreciation. Your depreciation is positive instead of being negative. Yeah, I think I did repeat that. I think hiyo nimesema nikarudia, make depreciation negative. I said that you do that. So what you do, just come and right click on building accumulated depreciation, right click, and then say edit account. Right click, and then you say edit account. Go to change opening balance. Go to change opening balance. And then from the change of the opening balance, you'll really have to do some things here. This particular account, this is what you're supposed to do next. So allow me just to proceed with what I was doing first. Allow me to proceed with what I was doing first, because this is a stage ahead. This is a stage ahead. So I had said that you record this as a negative, but don't worry. Now, let's say this is our depreciation for the year. Now, come next year, we want now to do what? We now want to record another depreciation, because just like I've said, QuickBooks will not automatically track depreciation.
You are muted.
Sorry. Thank you for that. Thank you for that. So I was saying that to track our depreciation now, to track our depreciation for the for maybe this year, we have recorded our first depreciation as this 50,000. Now, come next year, we want to record our depreciation for next year. And just like I was saying, QuickBooks will not do what? Will not automatically track your depreciation. QuickBooks will not automatically track what? Your depreciation. So you need to be keying in that particular depreciation each and every year. So then come next year, how then will we account for our depreciation? To do that, we need to create an account for depreciation that will help us to track depreciation expense. So we need to create an expense account called depreciation. We need to create an expense account called what? Called depreciation. So right click, then you say new, right click, and then you say new. And then of course, depreciation is categorized as an expense. So we are now not going to record it as a fixed asset, but we are recording it as an expense. Basically, we are creating an expense account. Okay, we are creating an expense account. Then you say continue, continue. So the account name, what is the account name? Maybe let's say it is what? Depreciation expense. For instance, it is depreciation what? Expense. That is our account name. Depreciation expense. Depreciation expense. It is not a sub account of anything, so we just say depreciation expense, then you say save and close. This name is already in use. Okay, let me see. So let me say depreciation expense 1. To make it different, I can say depreciation expense 1. Depreciation expense 1. And then I will save and close. I can say depreciation expense 1. Then I save and close. Yeah, here's depreciation expense. Here is an account for depreciation expense. Let me just see if it has recorded something. Yeah, it has a depreciation value here of 20,000. Okay. So this has already been used. So to have a clear understanding, I'm just going to use our new account that we have created for depreciation expense 1, because it's a very new one. So it will help us to clearly understand for this depreciation expense 1. Now, assume now we are in next year and we now want to record depreciation expense for next year on building. Okay, we are in next year and we now want to record depreciation expense for the next year on building. So what do? We have recorded depreciation for this year. Now we are in next year, or maybe we have recorded depreciation for 2 years. You want to record depreciation for the 3rd year. What do? Now come and double click on this building account depreciation. Building accumulated depreciation, sorry. Double click on this building accumulated depreciation because this is what we want to adjust. So we have building accumulated depreciation, then building cost. So double click on building accumulated depreciation. Double click on building accumulated what? Depreciation. Double click on building accumulated depreciation. Then for the account, where are we taking that? We are taking it to our depreciation expense account. That is the account that will be affected. The what? The building accumulated depreciation what? Account. So come here and select depreciation expense 1. Not depreciation expense, because this already existed. So in my case, I'm using depreciation expense 1 because my depreciation expense already had something in it, but I want us to clearly track this. So let's say depreciation expense 1, and then decrease. We have decrease and increase. So we're going to do what? We're going to decrease. And we are increasing by what value? We are increasing by the depreciation value for the year. So say like, for instance, next year, maybe our depreciation value is maybe 70,000. So this time around, the moment you go to the general journal, you're just going to record the value of the depreciation. Let me put it 100,000. So don't put it as a negative. Once you are in the journal, you just record it as 100,000. So long as you've said decrease here, just record it as 100,000. What did you do under account? Under account, I just clicked on the drop down. And then I selected the relevant account that should be affected by that account. So remember that we are already in the accumulated depreciation account as our primary account. So sawa, hiyo ndio ilitufikisha huko, the accumulated depreciation. So that is our primary account. So what do? You basically debit your what? Your depreciation expense account. So you come here, under account, select depreciation expense 1, the new account that we have just created for our depreciation expense. There's a new expense account that we created to help us track our depreciation expense. That is what I've selected here, depreciation expense 1. And then what do? We decrease that particular account by 100,000. Decrease that particular account by what? By 100,000. My drop down brings a different thing, please. What do you have? Abdi, it is decrease, not increase. It is decrease. It is decrease. You decrease by 100,000 or whatever depreciation value that you want to have for that particular year. Naomi, what do you have in your drop down for the account? Naomi. Okay. So you said after you select this as the depreciation expense account that we have just created, then come and decrease it by what? 100,000. Decrease by 100,000. So this 100,000 is like what? It's like our depreciation expense for the year. The 100,000 is like our depreciation expense for the year. Mimi wa positive niko sawa nikiweka hiyo 100,000. Yeah, just put the 100,000. Just put the 100,000. But if maybe you wanted to maybe correct your previous entry, you could just pass a journal entry by first of all increasing by the depreciation amount that you recorded as positive in the first case. Then after you increase it by that particular depreciation amount, then go ahead again now to record this journal entry that we are now doing. So the first thing that you are to do is to pass a journal entry to increase the amount. And then secondly, you now come and reduce it now by the depreciation expense for the year. But you can just proceed with what you are doing now. So once you record that, then that's okay. Once you record that, that's okay. Just click on record. Click on record. Click on record. Now, notice, once you record, if you come down here, this is now your accumulated depreciation. It has come to what? Minus 150,000, which is what? The previous 50,000 that I had recorded plus the 100,000 that I have now recorded. So it is now minus 150,000. It is now what? Minus 150,000. So this is now my what? My accumulated depreciation. So let's go back and see. Let's go back now and see. Yes, you can add another journal entry, another journal while recording another. You can see here the moment you click on record, it takes you to the next space where you can now pass the next journal entry. The moment you click on record, it takes you to the next space where you can do another journal entry. So yes, you can do only after recording the first journal entry, you can record the next. Now, let's go back to our fixed asset register. You just close that window. Then we go back to our fixed asset register. We go back to our fixed asset register. Then we check on this. This is building. Let's start from cost. Building cost unaffected, 2 million. That's perfect. So the cost of building is unaffected. It is still at what? At 2 million. Building accumulated depreciation. I had 50,000 at first. I have added 100,000 as my depreciation for the year. Now my total depreciation is what? 150,000. The total net book value for this building is 1,850,000. So the total net book value for this particular depreciation is now 1,850,000. Do we need to change the depreciation date? Of course, Catherine, in a real life scenario, you'll have to record the real date when you are recording the depreciation value. But this is just for the sake of this class. Because again, remember, we are also just saying that we've already gone a year ahead, when in real sense, we have not gone to a year ahead. So it's just for the sake of this class. Just for the sake of this class. So that is now clearly recorded. That is now clearly recorded. That is now clearly recorded. So let's say that maybe we are in our third year, okay? We are in our third year and we want to record depreciation for the third year. Remember, we have recorded depreciation for the first year, depreciation for the second year. So let's say we are now in the third year and again, we want to record that depreciation for the third year. We want to record depreciation for the third year. So what do we do? Once again, come and double click on building accumulated depreciation. This is what we will always use, the building accumulated depreciation. Just double click on it. Once again, it opens your journal account. Then again, what do we do? Come under account. That will always be tracked to the depreciation expense. So I'll select my depreciation expense 1 account. I'll select my depreciation expense 1 account. I will select my depreciation expense 1 account. Then what do? I pass my depreciation for this year and make an assumption that probably this year I had a depreciation of 70,000. 70,000. I have got no basis for doing this. I'm just recording a value, but your accountant will provide you with the depreciation rates at which you need to depreciate your fixed assets. So I'm just recording any random values for this. So once again, in my third year, I will record a depreciation of what? 70,000. I'll record a depreciation of 70,000. I will say record. I will say record. Notice my accumulated depreciation has already gone to 220,000. My accumulated depreciation has already gone to what? 220,000. So after you record, don't click on record again because there's nothing here. So una click to record mara moja after umemaliza ile first step. Ukishamaliza, this has already been recorded. The moment you click record, it's already done. So just close this window. So we are here. Let's check again. Building cost, 2 million, perfect. Building accumulated depreciation to 20,000. It has been increased. So building net book value, 1.78. Now, How then do we track our depreciation expenses? How do we track what? Our depreciation expenses. If maybe you want to see a list of our depreciation expenses for different years, we want to track a record of our depreciation expenses for different years. Simply track your depreciation account. Go and track your depreciation account. Go and track your yes, Maureen. If you input wrong figures, you will have to pass journal entries because that's the only way that you can correct those particular errors. You pass journal entries because if you start deleting, the audit trail will raise some suspicion on those transactions that you are deleting. Remember, even if you delete, there's a record that will remain showing that you have deleted this particular transaction from your audit trail report. So those will raise some alarm. Why was this deleted? So it is important that you just pass a journal entry. Now, check for your depreciation expense account from your chart of accounts. Check for your depreciation expense account from the chart of accounts. Here is mine. I actually used this depreciation expense one account. I used this depreciation expense one account. So we want to see our record of depreciation for the year. So what do? We run our depreciation expense report. Okay, we run our depreciation expense report. So just double click on depreciation expense one. And here you'll actually see a list of your what? A list of your depreciation entries. You'll see a list of your depreciation entries. Notice that the very first depreciation that we recorded is not reflecting here. Why? We did not track it to the depreciation expense account. We just recorded it as an opening balance for our accumulated depreciation. So we just recorded this as an opening balance for our accumulated depreciation. That's why it's not here. But anyway, we had a depreciation on this particular date and this particular date of 100 million and 70 million. So if this was a real life, this could probably read 15th of August 2023, and this one maybe 15th of August 2024. So this will be your depreciations. This will be your depreciation expenses. So that is how you track your depreciation expenses for different periods for your fixed asset. Let's do one more. Na tumalize hii maneno ya fixed asset register. Let's do one more. Tumalizane na hii maneno. Would you be okay if I used an existing account here, or you want us to start creating a new one? Would you be okay if I use an existing account or we start creating a new one? Okay. Good. Good. Thank you. So I'm going to use an existing account here. Thank you. Thank you. Perfect. Perfect. Now, just like I told you at first, these accounts that are existing here have been created here by default. So say you have now really purchased this motor vehicle. Let's use, for instance, this motor vehicle. Let's use this motor vehicle. It has already been created. Now we have motor vehicles, we have the cost and the depreciation. So take this cost as the value at which you purchase this particular motor vehicle. Then this depreciation is actually what we called accumulated depreciation under our building. So this is what we call building accumulated depreciation. So it's just the same as this depreciation for motor vehicle. Now let's say you have now actually purchased that motor vehicle. So what do? Just come and right click on cost. Come and right click on cost, motor vehicle, then cost, then you right click, motor vehicle, cost, right click, and then you say edit account. Motor vehicle, cost, right click, then you say edit account. So if you want to maintain it as cost, then that's okay. So it's okay. You can just maintain as cost because it is being tracked under motor vehicles account. It is being tracked under motor vehicles account. So what we will edit is actually the opening balance. So say enter opening balance. Enter opening balance. So you have now purchased the motor vehicle, right? You have now purchased the motor vehicle. So what is the value of your motor vehicle? At what price have you purchased the motor vehicle? You have purchased the motor vehicle, for instance, at 3 million. You have purchased the motor vehicle at 3 million. As of what date? I can backtrack it to 31st of July 2024. So on 31st of July 2024, you purchased a motor vehicle at 3 million. Say okay. I said you right click on cost of motor vehicle. I said you right click on cost of motor vehicle, and then you say edit account. Right click on cost of motor vehicle, then you say edit account. Right click on cost of motor vehicle, and then you say edit account. That will land you here. The only thing that we are editing is the opening balance. So you say enter opening balance. That's the only thing that we are editing here. And the opening balance is 3 million, which is actually the value at which we have purchased our motor vehicle. As of what date? The date on which we have purchased that particular motor vehicle. Once you've done that, you just click OK. Once you've done that, you just click OK. Then you save and close. Once you've done that, you just click OK. And then you save and close. You save and close. So notice now that the value of this motor vehicle is 3 million. Its cost is as well 3 million. So far, no depreciation has been recorded on the motor vehicle. So far, no depreciation has been recorded on what? On the motor vehicle. We haven't recorded any depreciation on motor vehicle. So it is just the cost at which the motor vehicle has been purchased. So let's say that we now want to record the depreciation for this particular motor vehicle. We are in our next year of accounting period, and we have actually had a depreciation on this motor vehicle, and therefore we want to record a depreciation on this motor vehicle. What do? We'll come to our accumulated depreciation account, which in this case called depreciation, will be here. Then just double click on that, and then we will do the necessary. So we'll just pass the same entries as what we have done before. So which account will be affected here? This should actually go to the depreciation expense 1 account. That is where I'll track that. It will go to the depreciation expense 1 account. Then I will decrease this by what figure? Say, for instance, 110,000. Say, for instance, 110,000. That is the value by which I'm depreciating this. What will I do? I will click on record. Suppose you want to change the date, you can change it from this particular place here. But I'll come here and click on what? Okay, it's on 31st. Maybe I can say 15th August. Yeah. And then I can say record. I can say record. And here, you'll see the depreciation on motor vehicle coming to 110,000. The moment you click on record, just close this inner window. Just close the inner window. Then now let's see. Let's see now. So here we have motor vehicles. Cost 3 million. Hiyo haifai kuguzwa because that is the value at which we bought the motor vehicle. So here haiguzwi. So we have the cost of 3 million, depreciation of 110,000. And now the net book value of motor vehicle is 2,890,000. Let's record depreciation for the second year. Depreciation on motor vehicle for the second year. Depreciation on motor vehicle for the second year. That is depreciation for the first year. So how do we record depreciation on motor vehicle for the second year? Once again, just come back, double click on this depreciation. Double click on depreciation. Then after you double click on depreciation, here, account, inaenda depreciation expense 1 account. Inaenda depreciation expense 1 account. And say that this year, the depreciation is 100,000. So you decrease by 100,000, you say record. Automatically, accumulated depreciation increases to 210,000. Automatically, the accumulated depreciation increases to 210,000. Close that. Let's track that. Motor vehicle cost 3 million. Motor vehicle depreciation 210,000. Motor vehicle net book value 2,790,000. Sio chapter tumefunga. Are we okay? Are we okay? Naomi, wait, please. Mine is 100,000, not to 10. It's because you've only recorded 100,000. Did you record the previous one, 10,000 that we recorded? Because I haven't recorded to 10. I initially recorded, first of all, a depreciation of 110, and then secondly, I recorded another depreciation of 100,000. That's why I'm having now an accumulated of 210. That is why I'm having an accumulated of 210. What if you purchased a new motor vehicle? How do you record it? Can somebody answer, Frank? Is there anybody here who can answer, Frank? What if you purchase a new motor vehicle? How do you record it? Can someone answer, Frank? Is there anyone who can answer, Frank? If you purchase a new motor vehicle, how do you record it? Good. You'll basically create a new asset account. You'll create a new asset account. That's good. So you'll just come here to your chart of accounts, and then you record it as a new fixed asset. You'll come to your chart of accounts and then you record it as a what? As a new fixed asset. Now, let's make an assumption that maybe you have two motor vehicles. You have two motor vehicles. So basically what you will do is that you will have your motor vehicle as your main or your major account. Okay? You'll have this, your motor vehicle account, as your major account. But now, under these motor vehicles, you'll record maybe Lexus motor vehicle, or just Lexus as your motor vehicle. You record its cost, and you as well record its depreciation. You record another one, Land Cruiser, as a sub-account of motor vehicle. Remember hata ile Lexus pia una record as a sub-account of this motor vehicle. Now, the cost will be a sub-account of Lexus. The depreciation will as well be a sub-account of Lexus. Then the other motor vehicle, Land Cruiser motor vehicle, sub-account of motor vehicles. The cost will be the sub-account of the Land Cruiser, and the depreciation will as well be a sub-account of the Land Cruiser, unless maybe you are depreciating all the motor vehicles at the same rate. That is when unaweza ziweka as sub-accounts of motor vehicles, so that you just depreciate all at once. Do it. Okay. All right. So here we have motor vehicles. Here we have motor vehicles. And let's say that, for instance, you have got two motor vehicles. So I'm just going to maybe to create two other accounts for a motor vehicle. So let's say we have got maybe the Lexus and maybe the Land Cruiser that I'm talking about. So right click, you say new, fixed asset, continue. The first one, let's say here is what? Lexus. You can just say Lexus, no need to add that. Then I put it as a sub-account of what? It's a sub-account of motor vehicle. Where's my motor vehicle? Here. It's a sub-account of my motor vehicles. It is a sub-account of my motor vehicles. Enter opening balance. At what cost did I purchase the Lexus? 2 million. When did I purchase it? I purchased it, for instance, on this particular date. Then I say, okay. I say, save and close. I say, okay. Then I say, save and close. Okay. And then save and close. So I want you to notice that the cost of motor vehicle has now increased to 4,790,000. The net book value for motor vehicles have increased to 4,790,000. That is after I have recorded the 2 million for Lexus, because this Lexus have actually recorded it as a sub-account of motor vehicles. Now, this is what I was saying on the cost and depreciation. So I've actually just recorded it as a cost, all right? But literally, you're supposed to create a cost account for this, so that you're able to track the cost and depreciation for this. Just the same process that we did for this motor vehicle. Only that now, if, for instance, we are creating depreciation for this Lexus, what do? You just right-click, you say new, and then fixed asset, you continue. Then what is the name of this? This is Lexus depreciation. Lexus depreciation. Lexus depreciation. It is a sub account of what? This is what I'm saying. If you are doing depreciation for all your motor vehicles at the same rate, utaweka tu hii ikuwe sub account of motor vehicle. Sawa sawa, you'll just have it to be a sub account of motor vehicles. But if you are recording depreciation as different values, then what do? You make this a sub account of Lexus. So that if Lexus has got its own depreciation, Land Cruiser has its own depreciation, you now put it as a sub account of this Lexus. Otherwise, you put it as a sub account of this motor vehicle if you are recording depreciation at the same rate for all your motor vehicles. So let's say, for instance, it's just for Lexus. Let's say, for instance, it's just a depreciation for who? For Lexus. Let's enter an opening balance, and I will say maybe minus 50,000. I'll say maybe minus what? Minus 50,000 as of maybe 15th of August. I say, okay. So this is where somebody missed entering this depreciation. So if it's depreciation, record it as negative. I say, okay. And then I say 7 close. I say, okay. And then I say 7 close. So look at this. Lexus, its value has reduced to 1.95 because of this depreciation of 50,000. And as well, the net book value of motor vehicles has as well decreased to 2.74. Why? Because of this 50,000 depreciation on Lexus. So if you have another one, like maybe Land Cruiser, you'll open an account for Land Cruiser, make it a sub account of motor vehicle. Open a depreciation account for it, make it a sub account of either motor vehicle if you are recording depreciation as a whole, or make it a sub account of the Land Cruiser if you are depreciating the Land Cruiser on its own. That's okay now, right? Is that now okay? Is that now okay? Good. Good, thank you. So let's proceed to something else. Let's proceed to something else. Now we are all set and we are in order. We are all set and we are in order. So I now want us to go to transactions. I now want us to go and start recording what? Transactions. We start recording transactions. So before you record transactions, kindly make sure that you have a valid bank account. So make sure that you have a valid bank account with something in it. I'd really want you to have a valid bank account with something in it. Just in case you had not opened a bank account, you can simply right click from your chart of accounts from your chart of accounts, you want to open a bank account, right click, and then you say new. Right click, and then you say new, right click, say new, right click, say new, and then of course this is what? Bank. Right click, new, this is bank, you say continue. Right click, new, bank, you say continue. So what is your account name? NCBA, for instance, NCBA Bank. I'm just using that, but you'll have your account name. So if it's a sub account of anything, you can make it a sub account. Otherwise, you leave it as it is. Make sure that you enter an opening balance, please. Enter opening balance and say maybe here I have 2.5 million. Say here maybe I have 2.5 million as of 15th of August. That is my opening balance for the bank. I will say 7 close. That's my opening balance for the bank. I will just say 7 close. Set up online services to save time? No. Set up opening services to save time? Say no. To open a bank account, I said still on your chart of accounts. Still on your chart of accounts. Just right click. Still on your chart of accounts, just right click, say new. Still on your chart of accounts, you right click, you say new. Here, you'll select this as bank. You'll select this as bank. You'll select this as bank. You say continue. Record your bank account name. Record your bank account name. Record your bank account name here. Record your bank account name here. If it's a sub account of any account, you'll select the account that you are making it a sub account of. And I think I did explain this in our last session. I said, like, for instance, maybe you are creating a petty cash account. The petty cash account will maybe be a sub account of your certain bank account. So if it's a sub account of another bank account, you select the sub account of here. Then you enter the opening balance. You enter opening balance, enter opening balance. So statement ending balance, what is the opening balance that you have in your bank account? Just record any figure here. Record a good figure here for your opening balance. Yeah, when you have two NCBA's accounts, you will record one as a sub account of the other. You'll record one as the sub account of the other. So you'll have your major or your main account. I think we can just do one. So let me finish on this and then we do one for the sub account of, so that you see how you open it. Maybe you can open one for maybe petty cash. We can open one for petty cash maybe, so that you see how to create a sub account. So you have got the statement ending balance, key in and ending balance for this. And then we have statement ending date. We have got the statement ending date, key in the statement ending date. Once you're done, you just click OK. And then you click save and close, or save and if you want to continue. For now, but just close that. Now, let's say, like, for instance, let's say within our NCBA bank account, we are also maintaining a petty cash account from our main NCBA bank account. Okay. So then how will I record that petty cash account? I'll just right click anywhere and then I say new. I'll just right click anywhere. I say new. It will still be bank. It will still be bank. The account will still be bank. Continue. The account will still be bank. Continue. Then the account name, I will record it as what? Petty cash. The account name, I will record it as what? As petty cash. The account name, I'll record it as petty cash. I'll record the account name as petty cash. But then what will I do? I will make it a sub account of my main account, which is what? Either NCBA Bank or DTB, depending with which account am I maintaining the petty cash, okay? Depending with the specific account from where I'm maintaining my petty cash. So let's say I say that it's NCBA. So this petty cash is sub account of this particular what? NCBA account. Now, do I have any opening balance for this petty cash? Do I have any opening balance for this petty cash? Now here it will depend. Maybe do you want to transfer an amount from your main account to your petty cash, or you are opening this particular petty cash account with its own balance? Let's say maybe I'm opening it with its own balance. Remember, my main account, I think I keyed in a value of 2.5. I keyed in a value of 2.5. So let's say maybe in my petty cash account, I have maybe 500,000. Let's say maybe in my petty cash account, I have 500,000. I have 500,000 in my petty cash account as of that date. Then I say, okay. And then I say save and close. Then I say save and close. I say, okay. And then I say save and close. So now let's check our NCBA bank as it is. So NCBA, the main account is now 3 million. Sawa. But the petty cash account has 500,000 in it. Hii imekuja 3 million because at first I had 2.5, nikaongeza 500,000 kwa petty cash account. So it is affecting my main NCBA bank account to be this 3 million. I will show you later how you can transfer funds between your main account to petty cash account, or from your petty cash account to your main account.
Excuse me, Mwalimu.
Yes.
So it's an instance where we have different accounts under NCBA. So like money is coming in from different donors. So under the NCBA account, because the NCBA account records the total sum of amounts, it's like it's assuming it's one account.
Yes.
My question.
All right, I think I got you. Now, you have an account with NCBA Bank. If you have an account with NCBA Bank, maybe you have 2 accounts that you are running with NCBA Bank, okay? You have 2 accounts that you are running with NCBA Bank. One is for your petty cash, and another one is maybe for your receivables. I think that's where we maybe did a mistake. So what you are supposed to do is actually just the same thing that we did under what we did under what we did under fixed assets. So what will you do? You will create this NCBA account as a bank on its own without an opening balance. I think for me to clear this, let me just create another bank account, so that, let's say, just like what I forgot who asked the question, but let's make an assumption in the case of what that person has asked. We have got a bank account with maybe, let me say this time around, ABSA. So we'll open an ABSA account bank. Then this ABSA account bank, it is for receivables and petty cash. So the first thing that we do is to first of all open an ABSA bank account. So right click, say new, it's bank, continue. Then what's the name of this? ABSA. It is not a sub account of anything. Don't enter an opening balance. Just record it as ABSA bank. Just record it as ABSA bank. Say save and close. Just record it as ABSA bank, then you say save and close. Now we have our account here, ABSA bank, with a balance total of 0. So let's say within this ABSA bank, we have number one, accounts receivable that we are maintaining with it. So right click, say new. It is still bank, continue. So the account name, say maybe accounts receivable. We are maintaining a bank specifically for our receivables. Specifically for our receivables. It is a sub account of what? It is a sub account of our ABSA bank. It is a sub account of ABSA bank. It is a sub account of ABSA bank. It is a sub account of ABSA bank. And say now that within the receivables bank, we have something now. So we now have something. What do we have here? Maybe you have 1 million. We have 1 million within our ABSA bank. Within our receivables, which is part of our ABSA bank. So record the opening balance of 1 million. Record the opening balance of 1 million, save and close. So if you come here now, we have ABSA bank, a value of 1 million. Accounts receivables, 1 million. So now, we have two bank accounts with ABSA. One for accounts receivables, and the other one, say maybe for petty cash. Okay? Or maybe accounts payables. Because you already have petty cash here, I don't want to use petty cash again. So just say that we have payables. So you'll right click, you say new, bank again, continue. The account name, say payables. Say payables. That's our account name, payables. It's a sub account of what? It's still a sub account of ABSA. So it's still a sub account of what? ABSA. It's still a sub account of ABSA. Enter opening balance. Assume that maybe here we have 500,000 in it. We have 500,000 in our payables account. We have 500,000 in our payables account. We have 500,000 in our payables account. You save and close. So let's now check. ABSA bank has 1.5. So the total money that we have with ABSA. But how is this 1.5 subdivided? Accounts receivables, 1 million. Accounts payables, 500,000. Whoever asked that question, does that answer you now?
Yes, thank you.
Good. Wekasa asks a question. So petty cash ikipungua, do we go the same way na vile tumefanya depreciation? No. If you make a payment, you will select the bank from which you are making the payment. The moment you record that payment, hii itapungua automatically. the bank from where you're making the payment will reduce automatically. So you don't record this the way you've recorded for depreciation. Hapo, ukifanya payment, select you are doing the payment from which bank. Then that will reduce the balance in that bank account automatically. So you don't need to come here and reduce. If you have received money, you'll select you are receiving with which bank account. Ukireceive, itakuja iongeze the value in that particular bank account automatically. So you'll not come back here to increase the value. Now, let's say, ladies and gentlemen, we are now starting our transactions. We are now starting our transactions. We are now starting our transactions. We have received cash from a customer. Or in other words, we have sold goods in cash. We have sold goods in cash. What do we do when we sell goods in cash? We pass a receipt. When we sell goods in cash, we do what? We pass a receipt. So what do we do to record a receipt? What do we do to record a receipt? Basically, go to customers. To pass a receipt, you go to customers. To pass a receipt, go to customers. Go to customers. Go to customers. And then you say, enter sales receipts. Go to customers. Then you say, do what? Enter sales receipts. Go to customers and then enter sales receipts. Customers and then enter sales receipts. That will land you here. So from here, there are different ways that you can, there are different things which you can do with this particular what? Receipt. There are different things which you can do with this receipt. We have got the main window here for the receipt. We have got the formatting field where you can do what? You can have a preview. You can manage your templates. You can download your templates. You can customize your data layout. How actually your data appears on your what? On your receipt. How data appears on your receipt. Spelling, if you want to insert maybe more lines, you want to delete more lines from your receipts. Maybe there are other fields that you're not interested in. You want to delete them. You can do that. Send, if you want to send a receipt via an email to your customer, you can do that. If you want to generate maybe your receipt transactions. There's a quick report, transaction history based on your receipts, processed payment receipts, transaction journal, sales by customer detail, sales by item detail, item price list. We will view all these reports uko mwisho. It is the last part of our what? Of our course coverage. So easy to view uko mwisho. But for now, you want to record what? A customer receipt. Once again, if I'm at the main tab, the very first thing that you can do here is maybe you have recorded different receipts and you want to find out maybe a specific receipt. You can find from this first tab here. This first icon here helps you to find a receipt. You want to create a new receipt, you click on this. You want to save a receipt, you click on this. You want to delete a receipt, you click on this. You want to create a copy of a receipt, which means if you send it to a customer, you are also retaining a copy. You'll do this. You want to memorize. If you memorize a receipt, it basically means that the next time you can do what? You can easily retrieve that particular receipt. In other words, it is like if you want to create a receipt as a template so that the next time you are creating a receipt, you will actually use the format from that particular receipt, or maybe if you use that receipt regularly, you can memorize it so that next time you don't have to start getting that receipt afresh. Mark as pending, you start getting a receipt, but then some issues come along. So you mark that as pending if you haven't finished everything on it. You can print, you can email, you can mark to print later, you can mark to email later. You can attach a file to that particular receipt, maybe an evidence of a transaction, maybe an invoice attached to that particular receipt, maybe a photo of anything or all that. Then here, this is actually now where you're supposed to record now your receipt transaction details. Customer job, you select which customer is purchasing. So, you select which customer is purchasing. Then you need to record the date at which you are recording the receipt number, to whom have you sold. This will automatically update so long as you have selected your customer job here. This will automatically update so long as you've selected your customer job. Check number, if the payment was by check, you're supposed to update your payment method here. And then of course, you're supposed to select which items are you selling to that particular customer. Which items are you selling to that particular what? Customer. Customer message, you leave it there. Any memo, you save. once you are done keying in all the details of your what? All the details of your receipt. So we start doing this from our next session. Right now, what I want you to do, I know you recorded your items, but I just want you to go and remind yourself, record at least 5 more items. Record at least 5 more items with their selling prices and costs. Record at least 5 more suppliers, and as well record at least 5 more customers. So go and record at least 5 more customers, record at least 5 more suppliers, record at least 5 more items. So that is your assignment before we meet in the next session. Go and record at least 5 more suppliers, at least 5 more customers, and at least 5 more items that you are dealing with. Is there any question? Is there anyone with a question?